Hello and welcome to the ASB Investment Podcast, a show that keeps you up to date on the markets and helps you make smart choices with your investments. I'm your host, Chris Tennent-Brown, and in this episode I'll be covering the big news of the week, that being the announcement of ASB's new partnership with US investment firm BlackRock. BlackRock is one of the world's biggest investment management companies, and they've been helping us manage ASB customers' funds since 2015. To talk about what this new partnership era means for ASB investors, I'm joined today by ASB Head of Investments John Smith, and from BlackRock we're joined by Jason Collins and David Griffith. We'll also talk about the outlook for the rest of the year, including some thoughts on the latest COVID-19 developments, inflation and the prospects of rising interest rates. These are entirely our own views. It's not investment advice, but we know plenty of experts at ASB who will be happy to chat if you need. So firstly, John, welcome to the studio.
Oh, thanks, Chris. Good to be back. Been a while, but nice cold morning here in Auckland.
Yeah, it's certainly quite warm in this little tiny booth that we have to hang out in for the next while. And Jason and David, thanks for dialing in from Sydney, where I imagine you're wondering just when this latest lockdown will end. How are you going, Jason?
Great, thanks, Chris. I'm in the office today. I'm the only person actually in the office today. We are working remotely at the moment. And I was just reading this morning that it's possible that the lockdown will last for another few weeks. So it's a pretty unusual situation and not one that we expected. We thought we were out of this, but clearly we've done a lot better than many other countries in the world. Australia and New Zealand are both fared fairly well compared to some of our colleagues offshore.
But it's going to take a long time till we get to the end of this. And hey, welcome to the podcast, Dave. How are you going in the latest lockdown?
Thank you, Chris. Yeah, I guess no real complaints on my side. I managed to escape Sydney before the recent lockdown. So I'm bunkered down actually up on the central coast of New South Wales, about an hour and a half north of Sydney. So yeah, feeling a bit more secure up here for the time being, away from the sort of red zones in Sydney. So it's not so bad.
Oh, good stuff. And due to the wonders of technology, we can see each other, talk with each other and get on with our jobs. So thanks for all joining me. Now, I'll start with John. John, like myself, has been at ASB for many years, not far off 2 decades, in fact. So, John, let's start off with you just telling us about the ASB relationship with BlackRock and started back in 2015. And how it's developed and what's the key differences with this new partnership.
Cool. Thanks, Chris. So actually, the story of this latest relationship with BlackRock is an evolutionary story for ASB and our investment approach. So back in 2015, we found that there was an opportunity now for us to actually be engaging directly with managers of global equities rather than as we had been through pools, and that was going to give our customers an advantage in terms of after-tax returns. So we went out and we did a search of the market, and we reviewed a number of fund managers, and we selected BlackRock as the best of the bunch that we considered through a global search. The things that stood out for us at that time, particularly with BlackRock, was this really strong alignment between culture and values between BlackRock and ASB. This really, really strong focus on customers. And so we over the period since 2015, they've been managing our underlying assets, global equities and emerging markets and global property shares. And it's been a really strong relationship. We've really enjoyed working with the team. So continue on the evolutionary theme, and it's sort of like around 2019 we started thinking about, so where do we go next? One of our strongest investment beliefs is that asset allocation and currency decisions are some of the most important decisions we make. They're the ones that have the biggest impact on customer returns, and we've been doing that internally since the beginning. We've been doing it quite well, but the question in our minds was, how can we just take that to another level? And so at that stage we started looking at, so what are the different ways we could approach that? We did a bit of a search, and as a result of that, we decided to sort of extend our relationship with BlackRock. We found that the BlackRock team have absolutely amazing resources, global capabilities, have a really strong track record in particularly in the area that we're developing the relationship, which is to bring asset allocation and currency into their management. So this is going to help produce better returns for our customers is our expectation. We're going to be more able to respond to market events, and we just think it's going to be a broadening of bringing insourcing the vast capability of BlackRock into the benefit of our customers in multiple ways.
So this sounds like something you're pretty excited about, John.
Oh, I am. I've been working on it for in the best part of 2 years. Fascinating, the conversation we were just having about COVID and working remotely. Actually, we met with the team at BlackRock the beginning of 2020, and now we've been working on this for nearly 18 months, and only in that time did we actually meet face-to-face. Every other bit that we've done has been remote. But it's just a reflection of the sort of relationship we have with the people, is that you can build something like this completely remotely, and it's just incredibly powerful and strong. Yeah, I'm very excited about it. I think it's going to be fantastic for our customers.
Oh, good stuff. And Jason, you're the head of client business in Australasia and a member of the BlackRock Australia board. Tell us a bit about your role and how you will fit in with this partnership with ASB.
Yeah, thanks, Chris. I mean, my role in a nutshell is to try and connect all of the resources and all of the capabilities that BlackRock has globally and direct it towards our largest customers in the region. And ASB is one of our largest customers in the region. We started working with John and his team, as John said, around 5 years ago. And I think through the evolution of our relationship, bit by bit, John and his team has been able to leverage the resources that we've got, and we've been able to provide, tremendous access to our experts all around the world. And it's, I think through the relationship, John's spoken to people in London, New York, San Francisco, Hong Kong, Australia. And so it's been a really deep relationship. Broadly speaking, I look after the client relationships that we've got, marketing and corporate affairs, and a lot of the areas that relate to our public stance and perception. And the board role is really a governance role, because in Australia we're an organisation which issues product and also as a tax-paying organisation. So it's a pretty broad role, and I look after our customers essentially.
Good stuff. David, you're the head of investment strategy for BlackRock's multi-asset strategies group. And so can you explain to our listeners a little bit about your role?
Yeah, sure. Thanks, Chris. So I guess in my role, I'm responsible for setting the investment strategy for a range of different multi-asset portfolios we manage within our team. So sitting within the multi-asset team at BlackRock, we get the fun job of picking and choosing between all the cool asset class building blocks and tools that we have at the firm. For constructing portfolios, whether that's from an index perspective, factors, active, ESG, alternatives. There's a huge range of different building blocks we can pick and choose from, and across different investment styles of systematic and fundamental. We also have access to third-party manager strategies. So these are strategies outside of, external to BlackRock. So to use a bit of an analogy, and Jason, you're going to love this one, I sort of think it's a bit like an episode of MasterChef where you've got a pantry full of these great ingredients, and I'm kind of the chef that brings them all together to hopefully create something special at the end of the day. And a key part of my job is to actually work with investment teams like John's to provide them access to the same high-quality building blocks and the technology that I have access to at BlackRock to help John's team deliver better investment outcomes for ASB's investors.
Yeah, that's. I guess that's the bottom line on it. And hey, here's a fun fact. I think we all were at Bankers Trust, or the mighty BT, in the 1990s. I was in New Zealand, but I visited the Sydney offices many times. But that's a story for another day, and we're here to learn more about BlackRock and what it does for investors. So let's just talk a little bit about the size. Now, ASB's one of the big players in the New Zealand market, but here we talk about funds under management in the billions of dollars, and BlackRock I think measures funds under management in the trillions of dollars. But like ASB, the bulk of the fund that BlackRock manages is people's hard-earned retirement savings. So I guess despite the scale, we're actually in exactly the same business. But to give our listeners some idea about that scale, just how big is BlackRock, and how do partnerships such as the one we're talking about with ASB fit into BlackRock's overall business strategy, Jason?
Yeah, it's a funny thing when we talk about size, because when you work in the organisation or when you are dealing with clients, I don't think that we feel like a large organisation. I think the size is it's in the trillions, and it's money that we manage on behalf of clients. It's not our own money. We're a fiduciary. We don't invest our own money. We only manage our clients' money. And a lot of it is scale. When you manage index money, so you manage money against a certain index, it is, there is a science to it, and it's quite systematized. But as an organisation, I think we are around 16,000 employees in all parts of the world. But if you look at the DNA of the company, BlackRock was founded by 8 people 35 years ago. I think 5 of those people are still engaged with the organisation in some capacity, including the CEO and the president. And all of us, David and myself, know those founders. It does feel like a pretty small organisation when you work in it. And, I'm interested in John's thoughts on that, because John's been facing into us for the last 5 years. And John, I'd be surprised if you thought that we felt like a big organisation that was difficult to navigate.
Yeah, no, you're right, Jason. It doesn't feel like a big organisation. You manage trillions of dollars, but it's an organisation that feels it's good, almost got a family feel to it, and it's one of the things that we really enjoy. It's very similar culture to ASB.
I liked. When I get onto the to the website, you can see that coming through. And one of the things I really like about BlackRock comes right from the top. And I'm talking about Larry Fink's letters to CEOs. I'm sure many listeners have read them too. And I feel like he prods and prods CEOs about key investment themes and concerns. They're not fads. They're things like climate change that are really important to all of us. And I'm interested in how these themes that Larry raises, like climate change, like the focus on environment, social and governance issues, impact your roles and the things you do at BlackRock. Starting with you, Jason.
Oh, look, it flows through the organisation. It really permeates through all of us and everything that we do. And it's a funny thing. I mean, Larry, David knows him, and I know him, and he's been to our region quite a few times, and I think he's been a visionary. To start an organisation 35 years ago and for it to grow in the way it has been extraordinary. And, he started writing letters, in 2012, and he really, the aim was to be a fiduciary and to represent our clients when speaking to companies. So he's been writing letters to CEOs for the last 10 years. And really, it became, a big public thing, I think, a couple of years ago when he wrote a letter on purpose. And he talked about stakeholder capitalism. And it was about recognising an organisation's roles and responsibilities beyond shareholder returns. And it went into areas like, what is the purpose of an organisation? How do you view your employees? How do you work with the communities where you operate? And it was really about stakeholder engagement. And it caused quite a, I think, people stood up and took note, and it caused a lot of debate. And then, from that, Larry's letters over the last few years have been, increasingly forthright. In 2020, he floated the notion of climate risk is investment risk. And I should say, the first time that I came across such explicit language was your sovereign fund, New Zealand Super, going back a few years ago, made a very public stance around climate risk. And so, when Larry did that, I'd seen that before the New Zealand Super, but certainly on a global stage, it made a big difference. And we took some direct steps ourselves around things that we were going to commit to when it came to climate change. And then this year, I think the ante was really upped around supporting an ambition to a net zero greenhouse gas emissions by 2050. And we've put in place a bunch of actions there. Our engagement stepped up with organisations that we invest in. In some cases, we invest because we have to track an index, so they're not active investments. But our shareholdings on the registry, we are representing our clients. And so we really are engaging very heavily with organisations around the world for the purpose of trying to produce, I think, a better future. Now, that's a really large statement, but if you delve down into the individual actions that BlackRock's taking, all the questions we're asking of large organisations at the moment, we really are trying to live our purpose.
Yeah, it certainly makes you feel pretty good about your job when there's that big focus on working on behalf of our clients for things in addition to returns. David, how do these themes flow into your role?
Yeah, sure. I mean, sustainability and ESG has become an increasingly important investment theme, I would say, over the last few years, as more investors start to adopt ESG investment policies, and assess ESG risks in their portfolios. And this is starting to drive the flow of capital towards more sustainable sectors of the market, away from less sustainable. So for investment teams at BlackRock, it's actually a requirement that we incorporate ESG considerations into the investment process and the way we construct portfolios. So from a multi-asset perspective, we think about this across a few different dimensions. Firstly, the adoption of baseline screens, so removing ESG sensitive sectors from the portfolios, so sectors like tobacco, weapons, fossil fuels, etc. The second way we think about it is integration, and this generally occurs within the asset class. So active investment teams assess each investment on ES and G as part of their investment process, and make investment decisions around this, and whether to include a company in the portfolio or alter the weight, up weight or down weight. And that's a very important way that ESG gets integrated into the process. And then thirdly, and I think we've touched on this a bit earlier, is around stewardship and company engagement. Every portfolio at BlackRock benefits from our stewardship program, where the team engages with company boards to influence change. So when we're building multi-asset portfolios, we need to be mindful of the building blocks that we're using, the extent to which they incorporate screens and integration, and what this means for the overall portfolio in terms of ESG score uplift and carbon footprint, et cetera.
That's an amazing range of things that you do on behalf of your clients, and we'll certainly be looking forward to you doing some of those things for us here at ASB. And John, this was obviously a long process for you, and you must have developed some feelings about this along the way. How important were those values and investment beliefs of ASB's and BlackRock's were aligned, and how long did it take you to assess that and come to the conclusions that they were running in the same direction?
I answer the last bit first. I suppose it didn't take long at all. I think that these guys, walk the talk. So it's pretty easy to see where their values are and how the culture is, because you just see it in just the day-to-day interactions. But I think it's hugely important. I think that some of the things that I hear played back from the BlackRock team is the focus on customer that ASB has, and we hear it you've heard it in the way that David and Jason have been speaking already, and certainly I hear it on a day-to-day basis when we're talking to them. It's just this focus on customer, the fiduciary perspective, which is that we're managing our customers' money. This is not our money. It's not our views. We have to reflect our customers, and we have to get outcomes for our customers. And I think those things, the areas of very strong alignment between the two organisations and the two teams, that became evident really early on.
Let's cut to the nitty-gritty and the here and now. What sort of things do you think ASB investors can expect to get out of this partnership?
So as I said, the evolution here is to be better than we have been. We've been very successful. We've been very good. We've more and more customers have over the years chosen to invest with us, and their balances with us have grown. We're always looking to improve. So that the key focus of this is that I use the analogy because our office is at North Wharf, so we look out to where the America's Cup boats are, and so it was very easy for me to say we need to make the boat go faster. So and I'm sure this is, David's probably heard this a few times. Let's make the boat go faster, and that's the key theme. What we're looking for here is to make the boat go faster, to get better investment outcomes for our customers. At the bottom of it, that's what our aim is. It's always our aim is to get better outcomes. So that's going to be a key focus. So the things that BlackRock are going to be doing for us, to reiterate, they're going to be taking the reins of the asset allocation and the currency process. So making decisions about which asset classes to invest in and how much currency exposure we need to have. We'll retain the decisions to invest with underlying managers. So while BlackRock manages some of the assets in the underlying sense, wheelchairs, emerging markets and global property. We have other managers in that group, some managers in New Zealand and some other big global managers in the group that are managing the underlying assets. So BlackRock will be orchestrating the allocation of money across those underlying managers. That's the role that they'll be playing for us. But also, I suppose, we're going to be getting just leaning into the incredible depth of resources that BlackRock has. They have an investment institute, which is a think tank with a bunch of PhDs in it, where we can sort of like draw upon their expertise. Jason was talking a lot about climate and the advances that BlackRock's been making in that area, and we have a program of work over the next 12 months which will be advancing our climate strategy and looking to evolve some of our products, responsible investing, and again, BlackRock is going to be really helpful and supportive for us in terms of that development. And I think that we'll see a lot more pass-through of just market views, collateral, just supportive material that will help our customers get closer to what's actually going on in the portfolio. I think more of this type of stuff, I think, is also something that we'll be able to bring through from BlackRock, and I think that's going to be to the benefit of our customers as well.
And Jason and David, one of the upshots of this partnership is you guys will be able to come across the Tasman and visit the country of the World Test Cricket Champions. So that's clearly a big plus. But what are you looking forward to in the relationship, beyond obviously coming to a good cricket playing nation like New Zealand?
Well, just to extend the sporting analogy, Australia is a nation of tennis players after Ash Barty's win last week. So rugby and cricket we won't talk about at the moment, but we are looking forward to visiting again. Throughout the partnership, we, I think that that a few of us were in the ASB offices regularly. I'd say every couple of months over a several-year period. And also John and Adam and a range of executives from ASB were in our offices here in Sydney. So it's been a great sort of personal interaction over an extended period of time. And I think one thing I did want to say is, BlackRock globally doesn't have end investor customers through advisors. We don't own distribution, for want of a better term. So partnerships are really the DNA of our organisation, and the quality of client engagement is the way that we raise assets to invest on behalf of our clients. And so we have very few partnerships in New Zealand. I'd say one or two meaningful longer-term relationships which really leverage the broad depth of BlackRock. And ASB touches on a lot of different parts of BlackRock and is unique in that aspect in the region. So it's been, I look really forward to coming back over, as does David and our broader team. Because there's a lot that we can do and there's a lot we can learn. And as I said before, when it came to climate, I think New Zealand was a pioneer, and your sovereign fund was a real pioneer. And for us to keep coming over and learning from the things you do with your end clients has been fantastic, and we can't wait to do it again.
Oh, good stuff. And David, how about for you? What sort of things are you looking forward to?
Yeah, absolutely. Well, I guess, John mentioned it earlier. I mean, actually, we really enjoy working with John and his team. I guess we've been, we talk about the last 2 years and the journey that we've been on together, John. And, when we must talk at least 2, 3, 4 times a week now. And I kind of sense that, so in our meetings with the team in general, it's not about ASB, it's not about BlackRock, it's about us. And we talk about us as a team. It really feels like a team, team approach to this. So, yeah, I'm really looking forward to working with John and the broader investment team at ASB. And then secondary, I really want to, bring to bear basically the full BlackRock toolkit into ASB's portfolios to deliver better outcomes for end clients.
Make the boat go faster, as
make the
John
boat
said.
go faster.
Yeah.
Totally.
Hey, well, and let's turn to the investment landscape, and I'll be honest. If you'd asked me 15 months ago where financial markets would be right now, I wouldn't have predicted that we'd be sitting around talking about share markets trading at all-time highs, let alone starting to fret about inflation and debating whether the Reserve Bank of New Zealand will raise the official cash rate this year or not. It just seems like things are going incredibly well. So I'm getting a lot of questions in my role as a senior economist about, are share markets too high right now? What's going on in the bond market? Should we worry about interest rates rising much quicker? So just some key thoughts from you, David, I think would be really interesting on just where you think the major markets, the share markets and bond markets are at right now, and a bit of an outlook.
Yeah, so I mean, I would say, the COVID reopening is very different to, say, the recovery post the global financial crisis. This time around, we've got substantial policy stimulus to bridge the gap. I think in the US, it's something like 4 times the stimulus for less than 1/4 of the economic shock. So this is huge policy stimulus that we're seeing from central banks and governments around the world. We're also seeing policy regime shifts from central banks. The US Fed, the ECB being more patient on rising inflation in this cycle, which has really important implications for markets, and particularly bond yields. And I'll get to that in a minute. So just looking at equity markets, sure. I mean, while traditional price earnings metrics, valuations look lofty, we need to consider the expected yield or return on these assets with respect to other assets in the portfolio. And one way to look at that is what we call the equity risk premium, which is basically comparing your equity yield versus your 10-year bond yield. And on that metric, it still looks relatively good. It's something like 8% equity risk premium in the US based on forward earnings for US equities and real yields. So when you're building a portfolio, it's all about trade-offs, and we're still fairly constructive on the outlook for equities, despite the sort of more traditional valuation metrics looking a bit steep at the moment. So yeah, I would say there's more uncertainty though further out the curve. The key question is around what happens to inflation. I guess the big debate in the market right now is it transitory? We just had another print of US CPI. Is it structural? What happens to company margins in a post-COVID world where companies look to secure, more reliable supply chain, wage pressures start to set in, workforce immobility, compared to pre-COVID levels? All these things need to play out. So, there will be some fundamental changes we're going to see happening in markets. So I would say as the near-term economic bounce from reopening fades, and if inflation looks to be less transitory and a bit more structural, we definitely expect markets to be more volatile compared to previous levels. And markets could start to test the central bank's resolve to look through spikes in inflation. So we could start to see a bit of volatility coming back into markets. But look, overall, over a longer term time horizon, we still see, based on our 10-year capital market assumptions, we still see positive returns from global equities of around 6% or thereabouts. And we're actually seeing a positive return from bonds actually of around 1%. So so summary is short term, we think fairly constructive on risk assets given all the policy stimulus, but this has got a long way to play out.
Yeah, those bond yields have been an interesting one for us. We got to incredibly low levels last year. I think our 10-year government bond was down to around 0.5%. Now it's up about 1% from that, and we're seeing that start to flow through to other areas. Mortgage rates here, for example, the longer-term rates are on the rise. So people are talking more about higher interest rates over the year ahead, but in a historical sense, they're still quite low, which seems, as you say, pretty supportive. Now, some of these issues I find incredibly complex to explain to customers. Over the course of this pandemic, there's been some pretty scary moments. March last year, but also pretty rewarding now when we're chatting to clients and they hung on in there through that down period, and equity markets have come back so strongly. So there's been some really rewarding aspects of client communication. So maybe we'll finish with you, Jason, just to talk about some of the things that BlackRock's done over the past 18 months to help clients understand what's going on, and the bottom line is help them achieve their investment goals. What's been happening in that space for you?
Yeah, thanks, Chris. I mean, it was really extraordinary last March, the way that markets moved, and you had double-digit moves overnight. And, as New Zealand market opened and then Australia opened, we were really having to move very quickly to communicate with clients because anxiety levels were really high. I mean, this was new territory. You hadn't seen an event like this, since the Spanish flu going back, 100 years. So the way that we reacted and communicated to clients, we had to innovate. We were very fortunate. In our office here, we have 40 investors across all asset classes. So if there was a particular sector issue or a particular asset class that was coming under pressure, and obviously equities came under a lot of pressure and certain sectors within equities came under pressure, we had an expert on hand. And my background a long time before Bankers Trust, Chris, in the 90s was I was a financial markets journalist. And so I ended up doing a series of podcasts and interviews with all of our investors here. Actually, we rotated through different investors and we got them out to clients straight away. And John and his team received those updates as soon as we recorded them. And, the ability to turn information around and communicate very quickly was great. We put it into the written word and sent it out to clients. And I think, we're able to move a lot of friction in the system for our clients who might have had to have waited to the end of the month or a certain time frame to get information out to their investors. So it's funny. It was a really difficult time. I was really pleased that we came out with a strong stance at BlackRock and essentially said, as equities sold off, we thought it was prudent to reweight your balanced portfolios to have a neutral stance in equities, which was an extraordinary call because the equity market sold off, I think, 30%. To say, top up your equity holdings back to neutral, and it wasn't advice. It was just a view that we had in our institute. But to share that information out to our clients was great. I think it was reassuring, because people's savings are certainly on the line. If you've got retirement savings and it's invested in equities and you see such a big hit, it's quite disconcerting. So information's really important, and providing John and his team information in a timely way that helped translate that to portfolios and to customer communications was something that we did very quickly and enjoyed doing at the time.
Yeah, that certainly must resonate with you too, John.
Totally.
Hey, I think this has been a great chat, and this sort of communication and the things that we've been talking about are stuff that I think will be great to do more of in the future, and I think our investors will really look forward to that too. So thanks, guys, for dialing in from Sydney. I hope you're not stuck in restricted conditions for too much longer, and I'll look forward to chatting with you in the future. And thanks, John, for joining me here in the booth.
Yeah, thanks, Chris.
Thank you.
Thank you, Chris. Thanks, John.
Thanks for listening to the ASB Investment Podcast. If you have any thoughts on today's episode, or if there's anything you'd like us to discuss on a future show, get in touch at podcasts@asb.co.nz.